Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 2nd of August. Now, the general news here, attributing the dollar gains to the relatively strong US numbers, right? And the Aussie dollar, well, the RBA didn't raise rates. There was no real change to the statement. Obviously, they're watching the numbers very closely, but you know what? You've got two sides of the equation there, the Aussie dollar and the US. So a weak outcome for the Aussie and say a slightly stronger outcome for the US, and you get that natural move, right? Back to normal markets. But just having a look at that, I mean, the market is a bit starved of, the news services, I should say, not the market, of sort of significant data. Now, the ISM data, it's up there, right? It's a key part of the whole manufacturing cycle and employment, retail sales in the US. If you have a look at the numbers here, though, the numbers, the employment number, prices paid, the actual manufacturing PMI itself, and construction spending were all weaker than the forecast, right? So I think there's a little bit of cherry picking here by the news services, and this happens a lot. So there's nothing much happening, and they see a move, say in the dollar, well, they can try and attribute that move to the data. Now, the fact is, some of these numbers are better than the previous numbers, right? But that's not what the market generally trades. Improvement overall, yep, that's the overall trend. But the construction numbers were down, slightly stronger ISM manufacturing, even though it was below the forecast. Same with the prices paid. But you know, manufacturing employment, that's got to be a bit of a concern. Weaker numbers there, and significantly weaker than previous. So do I think that ISM manufacturing was the big answer? It could be a bit of rebalancing, right? This is one of those weeks leading up to the non-farm payrolls where everything's there's a bit of balancing going on, right? There's the equity markets. If we're having a look across the markets and seeing what's happening, well, US equity futures, slightly down. Well, they are opening up down at the moment. We're seeing a risk-off profile with that, which would mean Euro, Sterling, Aussie go down and the dollar pairs all go up. We're not seeing that, right? We're seeing it's almost back to historical sort of market trading where US equities go lower, the dollar goes lower, right? So don't get sort of suckered into what's happening out there. Now, if on the bigger scheme of things, right, if I just come over to the charts, actually, let's just come over here to the currencies. If you have a look on the currencies on the daily charts, there's not a lot, nothing's changed. What we do have is we've got these levels building. And I'm talking about the dollar index, euro, sterling, and almost dollar Swiss to that extent. Aussie and Kiwi are out of the loop with regards to euro and sterling. Dollar yen, well, it's still pushing to the top side, but sort of mid-range, as is dollar CAD, right? So to me, this week, still dollar index, dollar Swiss, euro, and sterling are all sort of in play. And more importantly, the dollar index, well, euro is 58% of the basket, and that's going to directly impact dollar Swiss. And then sterling comes along for the ride. So that's the way you should be sort of looking at it as we go. Now, if I switch over here to the hourly charts, and you can see a bit more of what's happening just right now, it's a slightly different picture, right? You've got a little bit of activity here and there, but nothing really to write home about. Now, if I come just over here to my global markets page, right, let's just change that over. Okay, so, and then just looking at where the key opportunities are today. Now, if you're, for whatever reason, it's your day off and you think you're going to trade, well, maybe think again, because there's not much on the table today. Okay, if anything, you're looking for the trends to be in play, and that's pretty much it. BOJ policy meeting minutes, well, if they start talking, and they would have already done this, if they start mentioning specific dates around when they could tweak their policy, right, and they'd have to be very specific, well, then you'd buy yen across the board, right? But no mention of dates, and this is what you would expect, which has been happening for the last 15 years. No move, no change of policy. They'll do it when they need to. When, if the dollar yen's pushing up towards 145, 150, that's when they'll start doing it. So do I think there's anything there? No, but it is a central bank announcement, so it is important. If we have a look at there's not many numbers, like the Swissy, think of the Swissy like the Kiwi, right? You've got really a very small economy, and there's only a few numbers that come out. Consumer confidence numbers is one of those. Now, at the moment, if we get a high number, you'd be looking to sell dollar Swiss and buy euro, and that is with the current trend, right? But if the numbers came out horrifically low, sorry, I had to get that out, you'd buy dollar Swiss and sell euro. Euro's got a good trend line to sort of belt through. Dollar Swiss's resistance is a little bit higher. It's against the current trend. I can't see it being a long-standing move, but there may be some sort of activity there on the Swiss and likewise on the euro, right? That's the euro is where the liquidity is, but won't stop the Swissy sort of banging around, I can tell you. And that's pretty much it. So pretty quiet day. What you want to be doing is keeping an eye on the markets. We don't have the structure of a risk on, risk off day, I should say. So to me, if you're trading the markets basing off price action, be very careful if you're watching the equity markets for your direction. One thing is the Kiwi employment numbers came out a bit weak. That's a bit of focus. I'll be looking for potential levels to get in on the Kiwi. Once again, I missed the sort of the release of this data, but it is significantly, well, it's just weaker, right? And this is a busy time, like tourism. They got the World Cup down in New Zealand, which would be, be more employment involved in that. But the numbers were, well, the unemployment rose, okay? And there's the cost index. I'm not surprised there is a little bit higher quarter on quarter, year on year. It's not too bad. And just slightly weaker numbers to put a downward bit of pressure on the Kiwi, right? So when I look at the my currency charts here, and I'm like, well, hang on, Aussie against the crosses is struggling, and it's struggling against the Kiwi. Usually the Aussie and Kiwi work in tandem, right? They're closely related economies, geographically as well, obviously. And the rest of the pairs, well, a bit of a safe havens. I'll tell you what, they're buying yen and they're buying Swiss at the moment, right? Any reason for that? Well, I can't see any just at the moment, but stranger things have happened. All right, guys, pretty quiet day overall. Don't get yourself bent out of shape and spend endless hours in front of the screens. The idea would be go through your charts, try and work out what is moving the markets around. Check out the long-term trends, short-term trends on the global markets, as well as, say, the FX and equities and commodities and these other instruments. You may find a diamond in the rough, and get ready to look for the opportunities around that. All right, guys, have a good one. All the best. Cheerio.